I am curious as to how you're preparing for the potential that some of the mortgages being originated may now start relying on one of your main competitors.
Well, we'll see how it all shakes out. The reason that we've had the performance we've had, and the reason that FICO scores are thought of the way they are as an industry standard, is that we've been delivering really highly predictive results for a very long time, and there's tremendous efficiencies in using a score like FICO through the system. We'll see how this latest idea with lender choice plays out. There are a lot of policy issues that go with it. And so, I'm confident that Director Pulte at the FHFA is going to wind up studying it and getting industry input and figuring out the pros and cons. I think there's some real challenges, race to the bottom kinds of challenges with lender choice.
With regards to the lender choice, and we should just make it clear to our viewers, they do have the choice. This isn't being mandated that they somehow go to VantageScore over FICO. You guys were dominant for a reason, is because, at least in the perception of lenders, you offered probably one of the more accurate pictures of the creditworthiness of borrowers. What is your selling point when you stack up your algorithms and your models versus the algorithms and models that VantageScore uses?
Okay, great question. So the FICO 10T is the most predictive score in the marketplace. It's currently being used in the non-conforming market in mortgage. We've done 300 billion in originations with FICO 10T. The process that the FHFA used with Fannie and Freddie evaluating scores over a period of years and figuring out what was most predictive and what had the most benefit for the system, cost of the system, resulted in a recommendation to use FICO 10T along with Vantage. The most recent pronouncement from the FHFA is that Vantage and FICO Classic will be used. And although FICO 10T is still approved, right now the lender choice is FICO Classic and Vantage. FICO Classic and Vantage perform roughly the same. FICO 10T significantly outperforms Vantage, which means you're going to have lower credit defaults and probably qualify, well, not probably, our analysis says we'll qualify 5% more borrowers.
Is there a concern that, and this was raised a few years ago when VantageScore really kind of came to fruition, the idea that they were putting inputs in there that I guess traditional lenders in the past may have looked past, whether it's your rent history, other types of payment history that might not have had a direct relevance on your ability to actually pay a mortgage. And I am curious if you have any worries about the credit quality of people who would be approved and whether that raises any sort of extra default risk.
Well, I definitely have concerns about it, but not because of including alternative information like rent. Rental data is useful. FICO 10T uses it just like Vantage does. The issue there is there's just not a lot of rental data because the landlords don't report it. In general, landlords don't report it, so it's not really part of the credit file. There's a little bit there, but not a lot. The issue is that Vantage has much looser, more lax credit standards. Their standards for scoring, for example, they'll score on 1 month of data. We need 6 months minimum because we think you can't draw a line with one data point. The challenge is if you have two-score system and people can choose between the two scores and they don't hold the risk because the risk gets passed to Fannie and Freddie and ultimately to the U.S. taxpayer. The risk is you'll have a race to the bottom. You'll have people shopping for the most lax score. You'll wind up with more of those lax scores. You'll have more credit defaults. And frankly, one of the toughest challenges is you'll wind up with higher capital requirements from the regulators. And that winds up translating into higher rates and fewer mortgages, frankly. So, there's a lot of challenges with it.
So I'm wondering if you could just kind of also just address investors for a second too, Will, because there is concern that with the competition, of course, that might mean that might constrain some of your pricing power. And you've had pretty aggressive pricing power over the years. Is there any sense here that you might have to temper that and temper future increases?
I think there's a lot of misconceptions about our pricing. The FICO score is an incredible value. We charge, for the mortgage score, we charge $4.95 out of about $6,000 in closing costs. So the whole idea that the FICO score is somehow a costly element in the mortgage industry is kind of crazy. We have enjoyed the fact that the score is an industry standard. It's widely used. And frankly, most of the places where the FICO score is used there's no government mandate, there's no FHFA. It's done with the free market and a lot of choice on the part of the people who choose to buy it. And so I imagine that will remain unchanged. I mean, we have a tremendous value. We are closing a value gap and raising prices over time. But it's important for us to not shock the system and for us to do it in a predictable way. And so we do that. But I'm not concerned about the future because I think that we represent tremendous value.
But $4.95 obviously is not a lot, but there are a lot of people, your critics, who looked at the increases over the years. The idea that you went from basically sub $1 2018, 2019 to almost $5 today.
Look, the difference between a penny and 5 cents is 500%. It sounds terrible in percentage terms, but let's face it, we're talking about the price of a FICO score being in the neighborhood of a cup of coffee. And we're talking about $6,000 of closing costs, hundreds of dollars in other fees, hundreds of dollars in title insurance fees, for example. So $4.95, frankly, I think it's a bargain. We could give it away for free and it wouldn't change anyone's costs.
Have you had direct discussions either with Bill Pulte at FHFA or anyone else in the administration?
Yes, of course. Of course we have.
So what's their beef with you?
Well, look, I think that the director is, he's a man of action. He wants to move quickly. He's decision oriented. And frankly, this whole process has taken years. It's true that it's taken years to get to this point. And so it's not surprising to me at all that he's working towards getting to a solution as quickly as he can. What's on the table right now is what's called an interim implementation. And it's a little puzzling to us why FICO 10T is not in the interim implementation, since it's the most predictive score. It's the score that both Fannie and Freddie evaluated and recognized as the most predictive score. So, frankly, I hope that they will release this data to the public. We have a white paper that explains it on our website, but it'd be great coming from Fannie and Freddie. So I'd love for them to release that. That's kind of where we sit today.
Yeah. So, well, just one quick final question. And I'm just curious as to what you're seeing just overall right now in the mortgage market, irrespective of what's coming out of, the government itself. Are things picking back up? I know we had some issues given how high mortgage rates got. Are things picking back up?
Well, I haven't really seen a lot of pickup. A little pickup, yes. A lot, no. Rates are still relatively high. But it doesn't take very much of a drop in rates to drive a lot of refi and buyers and sellers getting closer together. So, we're all optimistic.